Good morning, everyone. Jen Tozser, your portfolio manager here with a quick October fall update. And I'm going to talk about three things. I'm going to talk about, number one, how the markets typically behave in the fall. I'm going to talk about how our portfolios have done year to date. And then I'm going to talk about what we need to do to get out of this current economic downturn. So the first thing is, you may not know this, but I keep track on a monthly basis back 30 years on the month-by-month performance of both the TSX and the S&P 500. And I do that because I have some of you clients, and you know who you are, who often say to me, should I just sit out September? Should I just sit out October? Well, 50% of the time the market's positive in September, and 50% of the time it's negative. And that's not enough time, a big enough percentage to say, let's sit it out. And when I look at October, it's even more telling. 20 out of 30 years, October was a positive return month. So we don't want to leave out October, even though we currently are feeling it's not very fun. Now, we just actually did, as you know, when we manage your accounts, we do a reconciliation audit at the end of the quarter to check and see if you're making money. And I was looking for double digits this year. Of course, this latest downturn hasn't been too fun, but we're still sitting roughly about plus 5% to the end of September. We've given a little bit up this week, so maybe we're about plus 3, plus 4. I couldn't tell you for sure, but we're still going ahead. And when I look at this current drawdown, the next comment I want to make is roughly once per year, we have a peak to trough of -10. And we've had that for over the last 10 years. So it's not out of the norm for market behavior. And the final point I want to make is I can actually point my finger at the culprit. And the culprit is that we have interest rates that are currently too high, and I don't care what anybody says about inflation. Now that may sound ridiculous, but basically you've got, the Bank of Canada or the US Fed saying we have inflation, we can't lower rates. But you and I know, if you look around, people are having a tough time with these high rates. It is not easy to renew your mortgage. It is not easy to build up cash. Your business expenses have gone up. And what they haven't said is that if you have sustained high periods of high interest rates, you can also create inflation. So we have some more Fed meetings in October. Don't be too concerned about the fact that we're down, the market's taking this current drawdown. It's a common thing when you invest in the stock market. We're still making headway in the portfolios. We're here to answer your questions. Give us a call at any time. Thank you.